Radio Now 100.9's Indy Connection with Emily Metheny.
Hello, I'm Emily Metheny, your host. This week, I had the chance to talk with the Federal Savings Bank's Angel Terrazas and Coronel Realty's Luis Coronel about the housing market. To start, Luis tells us about what is currently happening in the market.
Thank you very much. First of all, just thank you very much to give me the opportunity to be with you and all your audience. Well, the market right now is very competitive. Right now, there's a lot of people looking for houses, and there's not properties on the market. That is one of the things. Right now, actually, for the last probably year and a half, I mean, the price of the properties that has been raised to the roof. Mm-hmm. But I mean, the competition is just crazy. It's just amazing how many people they're looking for houses right now.
And why is it that this is happening? Why are there so few properties with so many people trying to purchase?
Okay. Well, first of all, thank you for the opportunity. My name is Angel Terrazas. I'm with the Federal Savings Bank, and my NMLS number is 1288451. Well, I think that one of the reasons is that right now in the market, there's a lot of liquidity, and the credit terms are very flexible. So when that happens, there's a lot of money, so people borrow more, so there's more demand. It is easier to qualify for a mortgage, so there's a lot more people that are buying. You know, with the interest rates the way they were and the way they are, you know, it's very easy to qualify for a bigger house. So people take advantage of that, and there's so many people that are trying to buy a house, you know, because the rates are so low. They want to take advantage of that there's more competition in the market. There's more buyers. You know, as we see the market progress and the rates go up, they forecast that in 2022 there's going to be about 2 or 3 rate hikes from the Feds, right? So as we see that, it's going to be less and less people that are going to be willing to pay those interest rates. So there's going to be less competition. So I think that the market is going to stabilize. That's my prediction. But you just never know. Sometimes, especially for first-time home buyers, the rate's not really that important. It's important, but not that important because they're buying their first house. And that's what we focus on, first-time home buyers.
Mm-hmm. And because you mentioned first-time home buyers, if someone in 2022 wants to make that big purchase and get their home, what's that process like?
Okay.
Luis, Angel?
Well, number one, they need to be pre-qualified. And actually, Mr. Angel Terrazas right here, he's the one that can help them just to pre-qualify. Or in the case they cannot pre-qualify at this point, he can help them to start kind of getting everything on track. So in a small period of time, they can be ready to buy a house. Number two, they need to take a seat with their families and just start deciding what they're looking for, what they want, what are their needs, the wants, needs, and all that important information for the family, just to make this big purchase. So,
yep. Also, people need to, first of all, what they're going to be required to do is have good credit, right? So that's the number one thing that people that are thinking about buying that they should focus on is on building credit or repairing their credit, you know, whichever the case may be. Second of all, income. You know, you should always budget yourself based on the income that you bring in to your household, whether it's one income or 2 incomes, right? Budget yourself so that you know what you can buy based on what you're willing to pay your monthly mortgage on, right? A lot of times, for first-time home buyers, one of the things that I've seen is that it's an emotional buy, right? So when we're emotional, we start looking at houses, and we might see a house that's a little out of our budget, but in our head, in our mind, we can justify it. We can say things like, if I don't go out to eat every weekend, I can make the payment. If I stop buying clothes at Macy's and instead go to Walmart, I can make the payment. And you probably could for 1, 2, 3, maybe 4 years. After that, you've changed your lifestyle, right? So you bought more than what you could handle. After 3 or 4 years, now you're at a point that you miss those eating out, nice clothes, or whatever you sacrificed. And then you start thinking, I feel like I'm working just to make my mortgage payment. So keep that in mind. Here in Indianapolis, we are in a market where people can call, they can actually go from, it's called escalating, right? So you can buy something for like 100,000, live in it for 2-3 years, build some equity, bring down the debt, sell it, buy another one for 150, and then maybe 200, all the way to 300. There's other markets where that gap is just so big that people can't do it. Here in Indianapolis, we have that opportunity to be able to escalate up to whatever you like. So as a first-time home buyer, keep that in mind. We know we want to buy our dream house, right? But we can strategically plan to get that dream house maybe just in a few more years than what we thought. Yeah, so credit, income, and then your documents. Have all your documents in order. Your tax returns, your pay stubs. Don't throw away your pay stubs. And if you have them in electronic form, print them out. And then your bank statements. Always have some money, even though there are first-time homebuyer programs that can help you with the down payment. But in Indiana, the buyer pays the closing costs, right? So therefore, you got to have a little bit of money so you can pay some of those expenditures. So that's what people should have and should prepare themselves, and have a good team with them. A good loan officer that's going to explain to you what your options are, that's going to do an analysis of your financial situation, and a realtor that's going to guide you through the market, that's going to represent you on the contract, on the offer that you're putting in. So a team is super important when you're trying to buy a house.
Do you have something to add to that, Luis?
No, well, no, but I mean, what Mr. Terrazas says is very important. You have to have a team. This is a team buy. We will send you the information. We're going to show you the houses, but you as a buyer, you need to make your own research. You need to start looking for the houses, go out and just try to see the houses as like right away, especially because the market, how it is right now. I mean, you need to be if you're serious to buy a house, we need to be outside looking for a house every single day. So we have a really good team of agents in our office that can help them almost like every single day to go out and just to try to hunt this perfect house for the buyer.
Excellent. And Angel, you mentioned budgeting. How much of your budget should go towards your mortgage when you're planning?
That's a really good question. Here at the bank, the way that we do it, right, is we take the gross income, right? So if you're a W-2 employee, that means that not after taxes, but before taxes. How much money do you make monthly before taxes? So if you get paid, I don't know, $15, $20 an hour, just figure out what your monthly income is going to be. So let's say it's $3,000, all right? So then what we do, we recommend that 31% of your gross income should be used for your housing expense. Now, housing expense entails four things: principal and interest, your property taxes, your homeowner's insurance, and if you're giving a low down payment, then you're gonna have on your payment what's called mortgage insurance. So that's gonna be your housing payment. 31% of that. So if you make $3,000 a month, 31%, it's about $930 a month that you should budget for your housing expense. And that's where, you're going to be able to buy based on that payment. Now, if you don't have a lot of debt, right? Like let's say that you don't have a car payment anymore because you paid off your car. Well, you can increase it just a little bit more, maybe 35, 38% of your income to be used for your housing expense. But overall, what the bank will do is will allow you 45% of your income to be used for a combination of your housing expense plus your minimum monthly payments on your debts, credit cards, personal loans, car payments. So that's how you should budget yourself.
Excellent. Thank you. Luis, when we're looking for a home, should we start looking in an area, or how should I start that process to start looking for homes to start viewing?
Well, really good question. Well, first of all, I think this is one of the first things that the buyer, they need to do with the family, because they need to decide what is most important for them. I mean, the area is really important. I mean, they want to be specific in a certain area because amenities or whatever it is, or they want to be close to their jobs. So that they had to take the decision, like, well, we don't want to travel more than 15 minutes to the job. Or there's some people, it's very important for them, the school district. So they want to be in a specific school district. They want to be in, I don't know, they want to be in Pike Township, or they want to be in Zionsville, whatever it is. So they need to, first of all, they need to find where they want to live. Then they need to make a list, and they have to be like all the family together. Just like what we need, how many bedrooms, how many baths. Well, we need like, what is the space that we need in the house? Like 1,500 square feet, 3,000 square feet, or we're looking for like a big yard. Some of our clients, they own like a construction company. They need large space to storage their trucks or their tools and equipment. So that's some of the things that we need just to kind of take a seat. And especially when we have, and that's one of the things that when I have some consultations with my clients, that's the first thing that we try to figure out. Like what are you looking for? Which areas? And then at the end, we start sending information just based and focus on what they are looking for.
Excellent. So would it be beneficial to make a must-have list, a would-like list, things like that?
Of course. I mean, they sit and they make all the list of what they want, what they need, what they want, what they wish, so we can kind of start figuring out. One of the things that, and I'll be very honest with you, there's not a perfect house. I mean, there's a perfect house if you go outside and you build yourself a perfect house. But especially right now in the market, we have to find the most close property. What does that give you more for what you're looking for?
Mm-hmm. And like Angel said, we're in a market where we can buy that first house and then continually move up closer to that dream house.
That is one of the things. I mean, in other markets, as he said, I mean, it's very difficult. I mean, there's no way that you can go like in little increments. But if you can just buy something 150,000, and then 3, 4, 5 years, you can move up, and little by little, you can just eventually just to get to your dream home.
What can people do to be more competitive when they are either applying for the loans or just trying to seal the deal essentially and get that house? Because if there's a lot of offers coming in, how do they stand out?
One of the things we got to put ourselves as a buyer, we have to put ourselves in the seller's seat. We have to see the offer that I'm submitting as a buyer. I want to be able to see it from the seller's perspective, right? So if I want to put an offer and I say, this seller, he's going to get 10 offers. How can I be the best one? Well, obviously, one of the things is if you're investing more money into it, so then the seller is going to be more apt to take your offer seriously. Mm-hmm. So how do you invest more money? Could be a couple of ways. One of the ways is to give a large down payment. Tell the buyer, hey, listen, I'm not putting 3% down. I'm putting 10, 20% down. That means that I'm very serious and I really want this, right? And the likelihood of my financing going through has better odds than the low down payment one, right? Mm-hmm. Or I could offer more than what the property is worth, or what they're asking for. Not that it's worth, but what they're asking for, so I can let the buyer know, hey, listen, not only am I willing to pay what you're asking for, I want to go above and beyond, right? So then the seller can take that contract a little more seriously than the one that maybe gives him just what he's asking for or lowballing him, right? So now, as a realtor, they have other strategies that kind of works.
And some of those strategies is, number one, there's some things that we need to be careful what we're doing, because obviously those decisions can change the transaction pretty quick. And some of our clients, they don't want to do inspections. They say, I see the house is beautiful, I don't want to do inspection. That attracts the attention of the seller right away. But one of the things, if we don't do it like the right way, it's possible we can just get in a trouble right there, because we're taking the house as is without any repairs, and eventually, if there's something wrong, you will be responsible for that. But it's something that some of our clients, they are deciding to do, which and brings little success on our offers. There's what we call just to fill in the gap between what we offer and what the property appraised for. So sometimes some of our clients are like, okay, I am offering, we'll say, $10,000 more for the house. But in the case that the appraised value comes under what I offer, I am willing to put $5,000 or $10,000 or $2,000, little more money above appraised value of the house. So that also just bring is more attractive for the seller. And one more thing that is just giving a lot of success is letting the seller stay in the home after closing for a few more days. And we understand, because they're selling, but they are buying. And they are having just a little bit of trouble trying to find the right house. And sometimes they need 10, 15, 20 days more living in the house. If we're flexible and we're willing to give them a little bit more time, that can change the perspective of our offer and can be accepted also.
Yeah.
Excellent. If someone's working with your group or with one of your realtors, they'd be able to help find the best way to appeal to the seller, either through any of the methods you've mentioned, instead of maybe writing a letter. You would be able to help guide.
Yes, of course. We have all of our team is completely trained, and they will. And they know. We're one of the I would say the best teams in town, and we have a really good success on getting. I would say probably 60% of our offer accepted. So we will guide everyone just on the best way, and give them more information to place your offer and stand out.
Excellent. So we've been talking about the entire process. How does this process differ if I am a Daca recipient or an immigrant? How does this look different buying a house?
Okay, all right. If you're a Daca recipient, you're the same as a regular citizen. You have the same options. You know, you got your FHA, conventional, USDA or VA loans, depending on the situation, right? But if you're an immigrant that you don't have a social, then things really change. If you don't have a social, then most likely you're reporting your taxes with what's called an I-10 number, which is individual taxpayer ID number that's issued by the IRS for those people that don't have a social and want to report their taxes. Well, in those cases, the financing terms are different. The down payment is higher, it's 20%, and then the interest rate that the banks charge really different. Instead of the 2.7, 3%, you're talking about maybe 6.5, 7, 8%, depending on your credit profile from your I-10, right? So those are differently. And then closing costs as well, they're different. You know, it could maybe double your closing costs, only because sometimes they're broker loans. And because they're broker loans, then the broker needs to charge an origination fee. So that kind of changes. But the great thing is that there is financing available for those people. You know, they want to invest here in the country. You know, maybe they have plans to stay here, 10, 15 years and then go back to their country. Well, they're going to be able to invest, right? Build them some equity, and then they're going to be able to sell the house and take some of the equity home. So there's an opportunity for them. Or some people just, they plan to build their lives because their children were born here, and they want to continue living here. They're going to be able to invest in buying a house.
Yeah, and at the standpoint from the realtor, I mean, it's exactly the same process. I mean, there's nothing changed, so everything is just through the only thing things going to change is just everything with the lender. But as a realtor, nothing changes. It's exactly the same.
Excellent.
Now, one of the great things about the Federal Savings Bank, the bank that I work for, is that we're focused on the immigrant people. We actually created our own I-10 program that only we offer, and it's a great program. If people want some information, definitely give me a call, and we'll be able to go through and show you the difference between those two programs, the one that the investor offers, and the one that we created specifically for those people.
Excellent. And Angel, can you give that contact information?
Yeah, absolutely. You can always call my cell number, 765-609-0876, or you call my office number at 317-522-9351. Either number. If you call my cell and I don't answer, most likely I'm with a client. So you can either text me or leave me a message, and I'll definitely get back with you guys.
Excellent. And then, Luis, can you give contact for your realty group?
Yes, of course. You can call the office, 317-207-6822, or they can call me right straight to my cell phone number, 317-513-0076.
Excellent. And as we start to wrap up, you are both on a show here with one of our sister stations, La Grande 105.1. And can you tell me a little bit about your show, Tu Casa Indy?
Yeah, absolutely. We actually started this show a couple years ago. I got some health issues, so we stopped for a minute, but we started back on, and it's an informational show. Mm-hmm. What we want to do is we want to give back to the community. We want to empower the community, and one way of doing that is giving them the information, educating them so that they can make the best informed decision when it comes to buying a house. because a lot of times when we start going into the market, we hear a lot of things from a lot of people, our neighbor, our cousin, our uncle, and one of the analogies that I give is, hey, you know what? They went through that process, right? So they know a little bit of it, but it'll be the same thing as, let's say, a baker. A baker has a car. He knows how to change the oil. He knows how to change a flat tire, right? But he doesn't know how to rebuild that motor. It's the same thing, Your cousin, your uncle went through the process. They are familiar with the process, but it's not the same as your lender, your loan officer, your banker can sit down and tell you what your options are and tell you where you fall, how much you can qualify, and what's the best option for you.
Information. Always is just to be informed. In order to take the best decision, you need to be informed. You need to. It is one of the things that we try to do to our community is just to give them the tools so they can take the best decision for them. They can take the best decision and know I don't have to take the decision or somebody else, so they can do it by themselves.
Excellent. And when can people listen to Casa Indy?
Every Saturday at 9 in the morning from to La Grande, 105.1, 105.1.
Thank you for joining me this week, and please join me again next week. Until then, have a great week.
Radio Now 100.9's Indy Connection with Emily Metheny.